There's everybody. All right. Let's see. I think I need to raise this thing up a little bit more. Here we go. I have one of those desks that goes up and down. All right. Let's see. We got to make sure we're on the right microphone. How's the sound? Everything sounding good? All right, let's get on over to the market. Ooh, look at that. Someone's saying there's an echo. Is there really an echo? Let me just check this. Hold on. Yeah, I don't see how it's possible that there's an echo. I only have one microphone. All the other cameras are off. All right, good. There's always one in the crowd. Always one. All right. Let's see if we can get all this production stuff, working out well. So we have camera 2. I don't know why it's blurry. Why are you blurry? And we have camera 3 for a dramatic effect. I got the lighting different on that one. And then camera 1. What else do we have? We have the charts. We have let's see, what is that? We've got the super source. All right. Yeah, I turned on the autofocus. I think I need to turn on what's called the continuous autofocus. I don't know why it's doing that. Why are you doing that? All right. Now I think we're good. Got everything that we need. All right. So I don't know if everybody saw my podcast last night. I went on around 11 o'clock at night, and I just wanted to give you my view of what I think is going to happen over the coming week, and it's all kind of predicated on the market waiting to see what the Fed's going to do. And I didn't think that we were going to do the full-fledged crash just yet. I thought that was a possibility, but probably not just yet. And they want to wait for the Fed really to tell them what the cost of money is going to be and what their forward planning is, and to see whether or not they're going to do a 50 basis point hike or 75 basis point hike. Will they be doing 75 or 50 in the future? What can we expect to be the end result? It said all those different questions. So, so for all those reasons, I didn't think the market was going to just take things down because they want to know all those things in advance so that they can price it all in. The other thing that's very interesting is really the following here, and that is this right here on the SPX. I've never seen this. I have never seen two successive gaps like that. In actuality, it's three gaps. Because if I removed, do that, that is also a gap right there. From the close to the open there. So that's 1, 2, 3 gaps, but two huge gaps, consecutive gaps. Never seen that before. And it wouldn't surprise me if there was some sort of knee-jerk rally just to close those gaps. So I'm I look at that and I go, geez, that's I just don't know how the market is going to act to that. That's like new territory, completely new territory. Maybe we're just going to crash altogether and just, who cares about the gaps? Now, if we were to look at the long term of this and see just how far back we have to go since we were this low, and that would be right there. Let me see if I can draw a horizontal line. That would be right there. So that would be March 5th of last year was the last time we were at this level. And it was on a pullback. You can also see that apparently we came right down to an LVN, or very close to one, right there. Somebody had asked me earlier today, do LVNs do LVNs have any kind of effect when they're over a year old? And the answer is yes, they do. I don't know why, but they do. So we have an LVN that's actually right about there or there. I guess, you could squabble over a few points, but there's definitely an LVN right there. It might be more appropriate right there. It could be right there. I don't know. But whatever it is, from the market, they didn't care because it's a long time ago, and maybe a lot of those positions don't exist anymore. There is also some nodes in here that could come into play here. We have, of course, this node that we've been playing on, T1. And there is an LVN right there. Let's see if I can. I know that this sounds weird that these things actually have effect, but they really do. And it's good to point them out. There is a node, a minor node here. Maybe I should reduce the size a bit. It's a little bit hairy. Get it down to maybe 50%. A little easier to look at. So now these don't look so ominous. But one could make the argument that, let's see, this whole thing here is a volume well. And we'll rename that. We'll call that one volume well 2, and we'll make it nice and big to show its effect, because it could come into play very soon. And there is another prominent node, and it's way down here. You know, you look at that node and you say, my God, that's pretty far down. It's way out here. And this, in fact, is a complex volume well. It has a lot of fractal child nodes inside of it, but they're probably going to come into play. Let's see if we can point out some other. I mean, I would say that this is probably a prominent LVN, as is this one here. I'm sure that they're going to have some effect. You know, if we get down here. Let's see if we do. I don't know yet. I'm assuming that we will.
New visitor.
Let's see. So if we get it in here a little bit more, let's go all the way back to the COVID crash, which I think is going to be minuscule compared to the crash that's ahead of us. It wouldn't surprise me if we got all the way down to the bottom of the COVID crash. I know that sounds crazy, but this volume node here goes all the way back to what the previous high was before the COVID crash. So that's probably why it's sticking out there. Let's put that like all the way over there. Now, this is crazy stuff. Just sort of mapping all this out. You know, I don't know how you become much more accurate than this. You know, it almost seems like it doesn't make any sense. Just, you know, just draw these lines out there, get them out there. We all know that they exist. There we go. All right, kind of get it all mapped out. I think that there's a minor node in here that we can probably take note of. Oh, what happened to that one? This is probably worth mapping. I don't know why this one sticks out so much, but it does. It's kind of interesting because it doesn't look like anything specific over here. You know, when we had the run-up, there's a little bit of a consolidation there, so there was a lot of volume there for whatever reason. All right, so, and of course, what we don't see here in this context is the volume well number 2 until you start really bringing in more like that. And then it starts becoming, because you got to take this consolidation here and the previous pre-COVID high. This apparently has a lot. And actually, it's not even there. It's like this. Here's where all that activity is. All of that right there is pretty impactful. There you go. I mean, that's crazy. Just crazy to think of shit like this. So let's zoom in. Get all the way down there. All right. And now that I've drawn all these lines without really knowing where price is going, let's see how they seem to impact things. Which is another really amazing thing, you know, that when you do crap like this and you draw the lines in the big picture and then you see how the market is kind of paying attention to them, you know. So we had, came down to T1, we consolidated, we dropped right down to these LVNs. I guess we missed something right here. I'm not sure what it was, but came down, came back up, and consolidated on this LVN. Now it's come down to this LVN here. So it's all pretty cool how these features really will tell you where the pots in the road, where the potholes are in the road, or where the turns are. I don't know what's the analogy that you want to use. Hold on a second. I got to close the laundry room door. It's making too much noise. I don't know if you heard it, but it was bothering me. All right. So what is the plan of attack here? That's a good question. I think bringing in the previous low in is probably worthwhile doing, which is right here. We'll mark that up with a little square. Here's the previous low. I think, and of course, that level there and everything below, let's do this. Let's just say that everything below this is bear market territory. All right? That's all bear market territory. If we close below this, I think just from a narrative point of view and from the mainstream media and all the pundits and analysts and everybody, that's all they're going to be talking about is that we are now in official bear market territory. Of course, Goldman Sachs is going to have egg on their face, and Reuters definitely will have egg on their face. All these people that have been the sycophants of the Fed, they're going to spin this in some way. We're going to have the White House, I'm sure, blaming everybody but themselves. In fact, I think they're going to try to blame this on Donald Trump. I'm pretty sure of that. That's the whole purpose of, we have midterm elections coming up. So you have to understand that they need to deflect. They need to find the boogeyman here, and it's not them. They need to be viewed as the savior. And look, and it doesn't matter what your political affiliation is, whether the roles were reversed or whatever. They're in big trouble when it comes to these midterm elections right now. There is a huge, huge percentage gap, and that's all going to tie in to decisions that are being made on the markets. And you would think that the Fed is not, tied to the politics, but they are 100% tied. I think, Terry, I think Putin is beyond the blame right now. They will try, but I think the American public has already really realized that that skirmish over there has little to nothing to do, or very little to do with the situation that we're in. It's adding a little bit to the inflation and to the energy problem. Yes, there's no doubt. But all these problems happened pre the Ukrainian war, and everybody knows it. So to say that that is the cause, yeah, I know, tongue in cheek, but it's just unbelievable. Anyways, how does that help us as traders? See, the big question here is: are we going to be going down to this next value node down here that I think I will now tag as I don't know. We have to reorientate these volume nodes. I guess that's T0 now, and I guess this one would be T1. There might be another one that's going to form somewhere. I don't know where. Down here somewhere. But it's all about these LVNs now. There's going to be some child nodes that will pop up, I'm sure. Let's see if we can bring some more data in. If that will help. It's just maybe go to 4 hours. I'm trying here, trying to figure out what the landscape is, but it's so hard because it's so far away. All right, so we have that now into view. So if we I think if you get that, there we go. So there's my bear market territory, which goes all the way down here. That's bear market. I guess the next node will be probably around here. It's kind of a minor node. There we go. It goes all the way across. All right, so now we got a T2. That's nice. Let's bring these over a bit. Bring the bear market over. There we go. All right. What else do we have here? That's about all that's about all I can think of right now. All right, let's zoom in on that, see what we have. So my original prediction was that we would come down to this LVN and then bounce off of it. I suppose it's possible now that we could be going down even further, but the market doesn't seem like it's ready to do that. Maybe we should zoom in on this a little bit more and see what the battle is like going on here. Yeah, I mean, it doesn't show it very well here, but that's really where I was looking at the, bouncing from, right there. So that's where I think that's probably today's low. And there was a member that took a trade here where that is the center strikes that they took. So I'm thinking, watch that closely, and if you can grab some profit out of that today, that's great. The gaps are really bothering me. I feel like we really need to come back up to this T0 here at some point. Something's, the plunge protection team or whatever. I don't know. We only have a Fed governor speaking today at 2, Brainerd, and I'm sure he's going to try to do something to alleviate fears or to say or to somehow communicate that the Fed has things under control. And other than that, we've got to wait for Tuesday and Wednesday. This is really a precarious situation that we need. I get the feeling that maybe there's going to be some kind of leak or something in between those times to kind of fix this. Or fix it, or at least slow down this, and get people, give people a little bit more hope, or the market a little bit more hope. There's got to be something that's going to go on that's going to try to manipulate the market. They're just not going to let it drop here. They can't. Because right now we're really talking about a stagflation environment. And already you can see a little bit of reprieve. I don't know what this is going to do. I really don't. But if I were going to trade here, I would think that using the bear market as your probability of touch point and center strikes above this, perhaps at 38.40, something, way out there, is going to give you a good risk to reward. So let's see. I didn't even have my Thinkorswim on. Hold on. So got to log into my Thinkorswim. Got to let it install. I'll create some strategies that we can stage. I believe that really the call right now is a call fly above here, somewhere above the 20% retracement line. All right, so Chris wants to know, but what if they do let it go to hell? I think eventually that they are going to. But I think that what they're going to do is they want to set up the narrative in such a way that it will, in some way, provide some political cover, maybe temper the move down somewhat, maybe even provide some sort of small relief rally, and then that would be something that you can sell. All of these things are going to be designed to help out their friends, essentially. These little things will, in fact, enable certain members of the corporatocracy and the military-industrial complex to be able to at least unload or save some face, save a few $1 billion here or there, which will directly go into the coffers of various politics. Something's going to happen. I know that all sounds like conspiratory think, but that's the way things work. That's the way things work, whether you like it or not. All right, so I'm just bringing out the options chain. I can't believe that right now the expected move is only 44 points. That's friggin' crazy. I would think it'd be like 75 points at least. Let me just fix this here a bit. I want volume and open interest. And this is kind of interesting. So, yeah, this is kind of interesting. Expected move is only 44 points. Oh, I'm getting all of these. If I were to weigh the two volumes, I mean, what is this on open interest? Open interest is nothing. That's crazy. Look at on the side of the put side, the open interest is crazy, and on the call side, it's non-existent. However, the actual volume right now is starting to compete with the put side. So the call side is starting to compete. We have 3,800. That looks like a target. All right, so if we were to look at 3,800, they're looking at 3,800 as a target. So that's right at the bear market demarcation line, the line of hell. The edge of hell is 3,800. So that's why I really do think they want to get it above that, and I think that kind of effort will be made today. Yeah, what's going on with Tesla? Yeah, Tesla took a big dip today too, and it's recovering.
Returning visitor.
What about gold? Gold, huge dip in gold. But silver, not so much in silver. Well, it did. It also dipped. All right, so let's put on a trade. I'm not putting on a trade. What I'm doing is I'm staging a trade. So if I were to stage a trade, it would probably be at 3,800. Oop, don't want that. Ooh, that's ugly. Got to adjust the dates. Let's make it 20 wide. Well, let's start with 15 wide. It's not going to give us tremendous odds here. 3,800. I think I would prefer it maybe even a little bit further out. It's going to cost $1.30. I think that if we do have a kind of a relief rally, it'll be, I don't know. This is really tough. I don't want to take. Here's the deal. I don't want to take a lot of chances here. But I am more than willing to put up a few hundred, maybe $100 or so to try to capture this move that's going to keep us in that 3,800 range or higher. I think that is the move, at least until tomorrow or Wednesday. Well, at least until Wednesday. And it really depends on what the news cycle's like, and how big of a deal they make out of this. Everybody's going to come out of the woodwork and try to explain, that everything's fine, no need to panic. And then, of course, everybody on YouTube is going to be saying exactly the opposite. All the pundits on YouTube versus all the pundits in the lamestream media. So that's what we have to deal with for the next few days. Any comments on that? Any feeling? I think that this is probably a reasonable, but $1.75. I don't like that price. In situations like this, I don't want to pay hardly anything because you could get a ripping move and just blast right through it. And if you're paying $175, I'd rather pay like $75 if I could. Because no matter how you look at it, yeah, you might guess things right and pin a trade. That's wonderful and all, but the chances are much lower that that's going to happen on a day like today. So maybe if we move this out, let's go back to the chart, kind of gauge this. Oh, see, it's becoming more expensive because we're already starting to move back up. I would think that above this consolidation here, because that really is, you had this first consolidation. I would even think you could go to 38.55 or 38.50. Yeah, is that where we went? Actually, did we go to 38.50? We looked at 3800. I would say go to 38.50. This is the ES, right? I need to be in the SPX. How much of a difference is there between the SPX and the ES? There really isn't any difference. So they're interchangeable. That's because we're right near the end of the contract for the ES mini futures. Should we pay attention to the 10-year yield? There's no auction, so you can watch it. I don't know what it's going to tell you. It's not like it's going to give you some advance notice or anything. When the 10 years starts changing, so will the market instantaneously. I think a really good bet would be, centered on 38.40 to 38.50. I really think that we're going to come back up to here. Could we come back up and fill this gap? That's the question. All right, where is that gap? 3,900. Wow. And it is, holy crap, it's almost 60 points. I would say that right in the middle of that is where you put, the, your short strikes. 38.70. That's my guess. That's my swag. 38.70. I know that sounds crazy. You might be able to make it really wide. We'll start with 20 wide. Let's see what that costs. All right, so now look, we have a 20 wide spread, costs us 50 cents. It sounds crazy, but would you pay $50 to make almost $2,000? So Terry's saying 38.30, 38.15, 38.45. Well, let's put that in there. 38.30. 38.30, 15 wide. Let's see what the cost is. So if you wanted to pay 95 cents for that, it's not bad odds. A dollar to make 1900. I'm sorry, to make 1400. A dollar to make 14. So 1 in 14. It's not a bad trade. And if we do get a ripping high rally, what are the odds that it's going to end up at 33.30? Let's take a look at the volume profile. So 38.30 is, it's like right in the middle of this consolidation. I mean, I see I do see the logic behind that. So I endorse that trade. That's okay. I mean, if that's $100, if you want to wager $100, the other one you wager $50. Well, what would be the difference, though? Let's say that obviously the chances of pinning this trade are much higher than pinning this trade. But I think that this trade here will pay just as much if we do get a ripping rally. Obviously, it won't pay if it stops and settles on 38.30. So those are the things that I would consider. Terry, your trade is a good trade for one set of beliefs. Based on where the last consolidation was this morning, makes perfect sense. My trade is based on this idea of having the most massive gap that I've ever seen that would probably attract a lot of traders to try to fill it. Not fill it, but I mean there's other dynamics that are going on with other contracts or trades or positions that they have that are just hanging in the air that institutions are going to want to clean up. So I would say both of those. So one is for $1, the other one is for 50 cents. There you go. There are your choices. Should we go lower? I don't think it's going to go lower. Just don't think it. If it does, then okay. I suppose it could. What would be the lower choice? The lower choice, I would say, would have to be T1 at, man, I just don't see it. That is such a long ways down. I don't think that they would allow it to drop that far. So these other trades now are becoming much more attractive now that price is going down a bit. So Dane WRM Auto Body is looking at XSP, so 38.10, which is just above bear market territory, just above the 3,800 mark. The problem is that you're probably, okay, at 5 cents. 5 cents, that's crazy. At, but it's only one wide. Yeah, that's such a minimal. Look, if you want to, I mean, you're putting up practically nothing to make very little. If that's the way you want to spend your day, that's fine, and it's good practice. Today's probably a good day for practice. But I think that, there is some easy money to be made, and I do think that it will come up through and get out of this bear market territory. I got that stuck in my head, quite frankly. I've got that stuck in my head because I think that would make all the difference in the world for a lot of people if we were not in bear market territory. And we're very close to achieving that. We're certainly within the expected move to do that. So it would make sense, and it wouldn't raise a lot of eyebrows. It would make for a great story, great story on the mainstream media and the talking heads. So that's what I think is going to happen to save the world and get out of bear market territory. But everybody knows that we're going there anyways. That's where we're going. Yep, I'm gonna say that the target for today is right there. I believe that we're going to end up anywhere here. Because 38.24 is the bear market. So I believe that we're going to end up somewhere here. You see that that's at the top of this gap?
New visitor.
See that? Right at the top of that gap? That's where I believe the market is going. Can't see, oh, geez, can't see the chart. Yeah, I'll make this like, I don't know what color to make this. Got to make it a color. Let's make it a nice orange color, and we'll make it nice and thick. And we'll make the interior, yeah, nice blue like that. That looks pretty. I think that is where the market is going to end up today. All right, let's see. Let's expand that a little bit. We'll capture that. And we'll put that into the Discord. Desktop. Everyone based on warning analysis. My best swag is that the market will end up somewhere inside the orange box today. There you go. There's the prediction. What's going on with Tesla? Tesla looks like, is Tesla going to recover? Would Tesla recover all the way back up here? That would be crazy. There's the rally. It's starting. So, oh man. I just enjoy, I'm really enjoying just watching this, and then thinking how I might profit from something like this. This afternoon's gonna be really interesting too. But based on everything that I know in my years and the psychology of the situation, that seems to be the best possibility. What do I always have to show you the chart? Oh, that was the comment from before, right? I'm done showing the chart. I posted it in the Discord. All right. So now Damien wants to know: can I explain why? Did you go to the morning analysis? Basically, the market can't afford, not the market, the government and the Fed won't let us go into a bear market until the Fed has set the course.
Returning visitor.
All right. So there's the reasoning. I think it's going to end up being, true. We can probably make a little bit of money off of it by putting our bets above. No, I'm not going to do anything about a superfly. Sorry. No superflies. Let me just say this. All of these weird things that we've tried, superflies, broken wings, unbalanced flies, forget about them, right? They just don't work into our strategy. They muddy up what we're trying to do. Everything that we do can be done by putting the right symmetrical fly on. And that's all you need. If you're trying to be a hero, that's fine. You can be a hero. That's not what we're about here. We're about making money. And it doesn't matter if the market is, moving 1,000 points that day or 5 points that day. We're going to play it pretty much the same way and try to evaluate where we think the market's going to be, where it's going, what energies are pushing it there, and then we're going to take the appropriate risk to capture what we think is our best opportunity to capture some profit and some premium decay. That's it. We're not going to do anything fancy. We're not going to take any other additional risks. We're going to keep the risk super small and the potential for outsized profits, 8, 10, 15x the risk. Just stay consistent like that. Stay true to your strategy, your process, and work more on developing your habits, and that you're doing everything that needs to be done to the best of your ability. To me, that's the smart way to go. Trying to overreact to something like this is not going to help anything. And look, if you want to be a hero and you make gobs of money on this, great. I think that you can make gobs of money our way too, but without taking the kind of risk that is suggested by doing a superfly or a broken wing or any of these others. So, yeah, that's pretty much it. Any comments on that? So I also want to tell everybody,
Returning visitor.
if you haven't seen already, that I am starting an additional service or an additional feature into this service that is personal one-on-one coaching and mentoring. And I know that I already provide something like that, but it's not organized and it's not specific to you. Right? What I'm doing is essentially group coaching and mentoring, ad hoc, providing as much that I can in that context. But I'm going to be offering one-on-one coaching and mentoring. You can go to the website, go to the members area, and you'll see it down there. I can take on probably 5 people every, 5 new people every 3 weeks, I think. I think I figured that out. So there's limited availability, at least right now. But what I would do is I would go and I'd fill out an application and get signed up. And then I will then I'm going to put out a notice today for those people that have signed up on the application so that they can then do an initial meeting with me, and then we can talk about what is involved. Yes, of course, this is an extra cost. But the cost is going to be so cheap compared to what I would normally charge. Let's give you an idea. All right. Now, I've done a lot of coaching in my life. I've done executive and trader coaching, and most of the coaching programs that I put out there are somewhere on the order of $400 to $600 an hour or more. And they usually span over a long period of time, and they pay, that's what they are, and that's actually a very reasonable cost. There are others that are out there that are charging much more and have, a quarter the experience that I do. But what I'm charging here is a fraction of that. All right, a small fraction of that, and it is specific to what we're doing here. It is 100% performance coaching, and it's something that you can not only apply to this strategy, you can apply it to just about anything in your life, quite frankly. Dr. Russell wants to know, what are the center and width? I'm on the live, but it seems got a phone call. So I put, I'll tell you what I'll do. I'll put the 2 trades that I did, and I'll put those in the Discord. And these are the 2 trades that I recommend. One's a little bit more aggressive than the other. All right. So there are the 2 trades. I've pasted them in there for you guys. These are the 2 trades that I just pasted in there, the ones that we talked about. They're both based on the premise that we'll likely stay above the bear market. So Lance wants to know, I'd like assistance on asymmetry plays for stocks. Will this new service help? Oh, absolutely. absolutely. The coaching, like I said, the coaching is performance coaching. And although we will be focusing on the strategy here, it's really focused on you and getting the best out of you. So this particular coaching is wide and applicable to a number of areas in your life. Not only will it be directly applicable to this system that we practice here, but it will, quite frankly, would be applicable in any business setting. And I don't know that I'm going to focus on or will focus on life coaching, but in many respects, the content that we go over and the things that we will discuss will, in effect, be life changing, in my view. And so, yeah, and for the cost, I don't understand why I wouldn't get 25% of all the membership taking this up, because it's going to help you 100%. Let's see, we've got some comments in the Discord. Did that one too was only able to get 90 cents, unable to see even with expanding. Dean, I have...
New visitor. New visitor.
You can open the original document at full resolution, which is super high, by the way. All right. So I published it in the talk channel. I just published it in the talk channel, the two ideas. You'll see them there. So anyways, for those that are still in the... I'm sorry, I'm doing like 10 things at once here. So I'm going to wrap this up in very soon. I just wanted to show you this. Go to
New
members.
visitor.
Oh, everything is like super slow here.
Returning visitor.
And then fill out this coaching application here. I'm also going to be putting free resources up there for people. So that will complement the Zero DTE Coach channel, which is under Methods and Strategy. And so there's going to be a lot more, coming in, in terms of the coaching. But there you go. I don't know if there are any other questions. Any questions on the analysis this morning and why I'm saying that pricing is the pricing is probably going to try to stay above the bear market today and probably through tomorrow. Wednesday's a different story. I'm thinking that we're going to start getting a narrative coming out of the Fed and the government and others that are going to try to talk this up as much as possible. I'm sure that it's going to include huge, humongous lies. But they're going to do whatever they can to prop that up so that they can get their report out and hopefully, I guess what would you call it? A Hail Mary pass to try to keep it above the bear market territory. I don't think it's going to be successful. I think there's too much momentum. I think it's possible, though, that we do have a strong rally, very similar to the one that we had a few weeks ago. And then instead of consolidating for a long time, I think it's going to come down sharply. That's a possibility, too. All right.
Returning visitor.
Which one is more aggressive? The closer, more expensive one. All right. I think I'm done. Are there any other questions out there? No? All right, good. Then we'll see you on the Discord. I feel like I'm just, flopping all over the place here. It's just crazy. I'm just incredible. I'm looking at, where we're going and what this is all going to mean, and what's the potential downside to this. It is so horrific. I mean, it is really, really bad. I can't tell you how bad it is or how bad potentially it is. And I'm really looking forward to seeing how the Fed and the government handle this and whether or not that they can actually talk their way out of it. That's what I'm most interested in seeing, quite frankly. All right. So see you on the Discord. Take care.